very much. Thank you everyone to joining us. So, just a small history. Just preparing for this call and the webinar. So we discussed what we're gonna do and came up to the topic, which is we face a lot during the last period of time, but we want to make this webinar very informal and practical. So let me introduce three very nice ladies who will contributing this webinar very much. I mean, it's a Nino Masurashvili, it's Nana Berdzenishvili, and it's a Marina Guledani. Before we start to talk about the topic itself, so I will give each of them to like 30 seconds to introduce themselves, and then we continue and expand into the discussion of this topic. So probably we can start from Nino first, and then as I see on my screen, I will go that way.
Thank you, Georgi. Thank you all for this very interesting gathering and everyone who is participating. So I am a Nino, as Georgi introduced. So I've been working for TBC Bank for quite a long. Initially, I was leading the retail banking in Georgia and in TBC Bank. And from 2019, I moved to the risk area, and currently I'm a chief risk officer. And at the same time, I'm responsible for development as.
Yeah, Nino is back. Okay, let's move on. Nana, what about you?
Yes, right, shortly.
Okay. Hello, everyone. It's a pleasure to be here today with you guys. My name is Nana Berdzenishvili. I'm based in Tbilisi, and I'm ESG and sustainability lead in private equity fund, one of the biggest funds in Georgia and in region. And what we do in Georgia, we develop hydropower plants. We have 11 hydropower plants in our portfolio, and it's my pleasure to share my experience with you for the next hour or so.
And what about you, Marina?
Hi, everyone. Likewise, pleasure to be here. Thanks to everyone that joined today. Very shortly, I'm capital markets expert. I'm a lawyer by background. I used to run a boutique investment bank, and afterwards I switched to the policy work and developmental work. And under that direction, I've been working on reforms in Georgia and notably in Uzbekistan. I've been writing the law on capital markets. So my background is basically covering anything related to capital markets, which includes products. So I was asked to join this distinguished panel of participants to contribute in that context. Once again, pleasure to be here and thank you.
Okay, thank you very much. Okay, let's open the floor for the discussion. Generally, why we started to talk about this topic is several reasons. I mean, we as a businesses, and I work with a lot of businesses, hear a lot about the ESG's development and practices. We also hear that sustainability is very important. We also see that going sustainable or going green, and this is, for my understanding, most probably the two different things, but we will be discussing that. So there is a different understanding of the sustainability, and not a lot of the businesses see is there any profits could be done from these sustainability practices, and how we should be practicing that also is not clear. Where we start is not clear. However, at the same time, if you move to the investor side, especially, I mean, corporate investor side, there is a huge interest into the investing into different instruments which are financing the sustainability practices, as well as for example, the banking industry is actively investing in a lot of sustainability practices as well. So to understand for us, for the just normal businesses and SMEs especially, and on a frontier markets, how we go on, we want to start with the why, And this question would go to all of you, I mean, Nana, Marina, Nino, that from your perspective, especially looking to the frontier markets, what does being sustainable truly means on a daily operations? And I would ask the Nana to do the intro in that sense.
Georgi, thank you very much for an interesting introduction, and my sincere gratitude once again goes to CELA for creating this space where we can share ideas and where we can share our experiences. Now back to your question. In my understanding, anything planned and implementing in relation to sustainability should be done in a sustainable way. And I know it sounds like a paradox, but it is indeed so. What I'm observing nowadays when I'm talking to a lot of people, like in Georgia and in the region, that still many of us, when we talk about sustainability, we identify it with being green, like recycling initiative, reducing waste, using less plastic, which is good. There is nothing wrong about it, but it's just one chapter of sustainability, but not entire story. You rightly mentioned in the beginning, Georgi, that we should put this discussion into the context. And I think there is one thing which unites all of us, and this is the fact that we are coming from the frontier markets. And when we think about frontier markets and we look at them from the lenses of sustainability, there is one thing which is very important. The regulatory standards are still being developed, and it is not enough for us to comply with local legislation in many countries. On the other hand, as a business leaders, we are also in constant search for attracting additional capital. And I think that's where we meet investors. And a lot of investors nowadays increasingly asking questions about sustainability practices in the companies. And guess what? I have not seen even one due diligence which would focus on number of trees company has planted or how we have reduced using of plastic cups in the office. That's a reality. And Georgi, in the beginning, you encouraged us to talk about the real examples. So this is something I'm going to bring into answering the questions in the process of answering the question. So if company is truly interested in pursuing understanding whether the company is sustainable or not, there is one question, only one question the company should answer. And if it is a genuine answer, then we will get an indication. And imagine, and I will share this question. Imagine that company is doing something which is considered being sustainable, whatever it is. It could be one activity, it could be number of activities. And the question companies should be asking themselves is simple as it. If we stop doing this, will we still be non-sustainable? It's a very simple concept. And if we translate it into the reality, like if we are planting a lot of trees, which is great activity, by stopping doing it, we will not be transformed into non-sustainable company, and so on and so on. So sustainability oftentimes is mixed with CSR activities. And I don't have anything against CSR activities, but sustainability is something else. And I will go to it, I will go to the core. In my understanding, the sustainability is related to the strong governance. And I will repeat it. It's a strong governance which creates space. And strong governance comes with clear lines of accountability, transparent business processes, and also alignment in strategy. And I think when we talk about sustainability and how to create it in the company, why governance is important, because when you have strong governance, you as a company no longer dependent on the idea of one person. I'm sure that many of us who are attending this talk can recall at least one experience from our current or maybe previous experiences when CEO would go travel, attend some conference, would get inspired by some ideas, would come back to the office and would want to implement some ideas, but those ideas are not necessarily good for us to become sustainable. So in practice, if we want to be sustainable, and I strongly believe that we should be building governance, strong governance, it's a very difficult path to follow. Like it's a little bit boring. And honestly speaking, this is not something your PR team will excitedly speaking about. However, if you want to create basis, this is engine room. And in conclusion, I would like to say sustainability, it's not like standalone activity if you're serious about it. It's where you do your business. And once you and your team believe that it should be done this way, that it's not burden any longer.
Okay. Nino, how would you explain the sustainability for the organization which is financing that initiatives, and also how you look at that towards the clients that the businesses that want to become the sustainable. Would you agree with the Nana?
Yeah, of course. So, Nana, do you hear my voice?
Yes.
Yeah, okay. I will still switch off the video. Okay, so of course, I fully agree what Nana just talked about. The sustainability is a very different from PR activities, and this is something that the companies are investing to make sure that they're sustainable in a way that they are stable and can for quite a long create a good value. So sustainability means that how company approaches all of its activities, and those approaches can be applied to every aspect of the activities of the businesses. In TBC, we have defined a so-called ESG framework, which affects four main pillars, which are direct and indirect environmental impact, and also social part and the governance, which makes sure that all pillars are aligned together and brings a value. So in case of the companies, those directions are, of course, employees, how we're treating our employees, what impact our business operation and bringing, value chains, customers, businesses, suppliers, and of course, community and society. So it is like a overall framework how the companies, including the banks, might function in order to be stable, be sustainable, and bring good value both for the companies itself and the society overall. So later on, you have quite a lot of questions, and we will expand that topics more broadly.
Okay. Marina, what is the sustainability for you?
Well, from the capital markets perspective, it's always about pricing and the long-term prospect and horizon for the investment. So it's very clear that the global markets, particularly the Western funds, they are tilting. Not just tilting, they see the value in the sustainability and the pricing for the attracting the capital for the projects and companies that follow those practices obviously is gradually going down, and that's what you want as a sound and particularly big business who has better access to the capital for. So for capital markets, it's always expressed in pricing, the risk profile and pricing that is basically tangible in financial terms. So it's not just the word and reputation, but also the how this is expressed in lowering the cost of capital. Shortly, that's the answer I would give to this question.
Okay. Just a quick round about this. Understanding the sustainability and making the business case among three of you, and back to the Nana. From your perspective, and your experience that you are as a ESG, expert as well. So how do you measure financial and non-financial benefits of sustainability, for example, within the just normal companies?
This is a very good question, Georgi. It brings me back to governance, but there are so many things about sustainability I would like to share. So I will go to the first half of your question in terms of non-material aspect of sustainability and how important it is and what kind of impact it has on a company. So the companies which have strong environmental and social frameworks and policies are more successful in the market, and there is a lot of evidence about it. I don't want to bring a lot of numbers, but I mean, you Google it, you ask ChatGPT, and it gives you a lot of credible references. And there is something those companies are doing differently from others, and this is context. And again, since we're in a frontier market, I think all of us understand. And if there is any hesitation, I would like to confirm that context in our frontier market is everything. Oftentimes, I look at it as a non-material asset. You either understand it and use it for your benefit, or if you misuse it, or if you underestimate it, you will be out of the game too soon. So in my understanding, if company would like to have full knowledge about the context, it doesn't come from only numbers, from only reports and statistics. You have to go out and you have to talk to your stakeholders. And this is one of the standards, that you have to have stakeholder engagement plan. The problem is the entire framework of stakeholder engagement talks about communication, and many companies nowadays think that it's too simple. They do it anyways because they have other work stream, whether this is CSR, whether this is PR, but this is something different. The stakeholder engagement in frame and under the umbrella of sustainability means that you go and you talk to government, you talk to your competitors, you talk to non-governmental sector, you talk to investors, you talk to everybody, and that's how you build understanding about ongoing issues. And in return, it helps you to position yourself better, to identify sustainability streams, and what's important, to become resilient. And in business, while money is important, I think all of us agree on this, the time is even more important. And every business leader understands that oftentimes we are ready to pay a little bit more if there is an interest and shortcut in terms of time. Time is very important, and it helps you, the proper stakeholder engagement. If you think about yourself as a sustainable company, it's a prerequisite for you to be stronger on the market. I think it's very important. And in conclusion to your question, Georgi, I would like to tell you, like, maybe one example in Georgia. What we are seeing increasingly, there are big project, investment project, infrastructure projects, which could not be implemented, not due to the fact that they didn't have enough access to the capital, or they couldn't negotiate terms of loans with national or international banks, but they failed big times because they didn't have proper stakeholder engagement strategy, and they basically underestimated the local context, and the investors left country. That's a different story, but I just wanted to bring the examples that it's not something which was born in my head, but we have some evidence how important knowing and understanding the context and tailor your engagement strategy basically contributes to success of your business.
Okay, thank you, Nana. Nino, the TBC significantly increased the financing of sustainability kind of loan portfolio. And just quickly, can you give some quick examples, whatever you can share, for the businesses that or initiatives which become profitable or had got a lot of cost saving and so on because they have done these sustainable practices and investing in sustainability initiatives?
Yeah, sure. So in our portfolio, we do have different directions where the company initiated different projects and they are quite sustainable. But if we are speaking about the SME sector, probably the most realistic and important one is the hotel industry. the hotels, which we have in Georgia quite a lot, and especially let's bring the example of the Kakhetian region. So we know that the hotels do need a lot of resources, such as water, electricity, cooling, heating systems, and it also brings a lot of the waste as well. So solar power plants, which are integrated into the electricity supply system, saves energy costs significantly. And why? Especially in Georgia, we do have a lot of sunny days, around 250 sunny days. It is what we have counted overall annually. And it really creates a good and excellent condition for solar power generation. So this, the generation of the power itself is a business in Georgia as well, and many small companies doing that. But for the small and medium hotel, this is something that they are very interested. We have quite a lot in the portfolios. Average payback investment are 2-3 years, depending when you have started, because the technology is becoming cheaper each year because the technology is developing, and the panel itself can work up to 20 years. So this is something that with the sharing the experiences between the hotels itself, as Nana was saying, the learning the examples are also important for the other companies as well. The trend that we see that this kind of hotels on an annual basis are interested in that direction and asking for the bank loans to invest in the solar power stations. So this is quite a good examples which I can bring to your attention.
Okay, this is as I understand, this is basically the practical examples of initiatives that are financed quite well, but we are not. But some of these SMEs are not still there on the sustainable, on the level of the sustainability, which Nana was mentioning about the sustainability in terms of the governance thing. But this kind of initiatives, it's a kind of, is it the way, back to you, is it the way just going through bottom up that will be changing then the governance and some stuff as well? I mean, it's pop-ups in my mind quickly when you were speaking.
So you mean the governance, so initiatives of the government? This is what you are referring to?
No. Nana mentioned that sustainability in a big sense for the companies is the model of the governance and so on. And
yeah, so of course it is a one pillar which is related to the sustainable energy, right? So the energy which is created from the solar power itself, it is a sustainable energy. This is a one. But on the question, is it a profitable or not? The answer is yes. So no one makes those companies to do that, right? So they are taking the loans, paying interest in order to do that. So it is no way that anyone can make small and medium businesses to do something if it is not profitable. So this is a very good example when the company started step by step, and the trend that we see that there is each year more inquiries from the companies to ask for the loans in order to do that direction. So yes, this is a practical example, part of the governance system that creates green, let's say green energy, and also is profitable for the businesses.
Good. Marina, the very specific questions towards the capital market perspective. So what are the biggest risks for the business which decides to ignore the sustainability trends today?
Yes, thank you, George, for the question. There are risks, and as I mentioned in the introduction, it's all about first access to capital and then pricing of the capital which you attract. And obviously, every business needs and wants to attract the capital. And the wider the spectrum of the investors from whom you can attract capital, it's better for the positioning of the company. And therefore, if you are not doing something And this not doing decreases your opportunities in the market. If it by default must be bad for you, and that's what's happening globally right now. The companies that do not apply ESG filters are basically decreasing their chances of attracting the capital in the global markets because they're excluded from the investment universe of certain type, particularly from the funds that are focused on the sustainability. And that volume of capital is increasing because everybody understands that sustainability is a guarantee of long-term profitability and decrease of the risks. So it's basically a must if you really want to have all the available options in the market. But also in parallel, even if you do have the opportunity to access the market and you do not apply the ESG filters, cost of capital is becoming more expensive for you because you're viewed by this investor community as more risky, because it's very natural that investors are looking at you in long term, particularly if this is equity financing, right? And you have difficulties in attracting the growth capital for the same reason, because you need to prove to the investors that in long run and in long-term horizon, your business is profitable, but also sustainable. I very often correlate also these terms with the inclusive growth, because when you apply sustainability standards to your business and the way you operate, you basically contribute to the inclusive growth of the economy in which you operate yourself. So that's not even a side effect, it's something that is mutually beneficial for both of these directions. Now, when it comes to pricing, the risk is that once again, the capital that you raise is becoming more costly, because if you ignore ESG factors, you basically incur valuation penalties, because obviously when you want to raise capital, you go through the due diligence process, there are credit rating agencies that evaluate you, and there is a certain interest rate which applies to the capital you raise, and if you are perceived more risky, then the cost of capital is higher. Now, what exactly are these risks? If you break them down, the market understands that if you ignore ESG standards, for example, depending on in which jurisdiction you are, you might incur the regulatory penalties if you don't comply with certain requirements. We all understand that in frontier markets, these standards are not very high, but in certain areas like environmental protection, for example, and conducting the feasibility studies and assessments in the feasibility stage or later on, you are obligated to comply with those requirements. And if you don't have ESG filters and standards in place, you are more likely to default on those requirements, and as a result incur the penalties, which is of course not good for the investors, and this is perceived as a point of risk for the investor. Now, another risk is that the investor community views you as less investable in the sense that if you do not comply with the standards, you have less opportunities in the market, and it's something I already mentioned. So that's on a standalone basis. If I'm not the only investor and you need to raise further capital or growth capital in the future, you have less opportunities, and that itself could be viewed as a risk component. Something that Nana mentioned is another point. It's poor shareholder trust and brand reputation. Like if there is no governance in the company or a project, and if you don't have appropriate communication with the stakeholders, which includes employees, etc., all kinds of stakeholders, that itself is viewed as a point of risk by the investors and decreases your investment quality, basically. Cost of capital for you is increasing, and if I'm an investor today and I know you need to raise more capital in the future, that capital will also be expensive for you, so I discount you for that. So that's a basically discount, like evaluation discount that investors would make. Lack of sustainability credentials can increase borrowing costs, and that's what I've been discussing. So you become less profitable in the future, and again, that is weighed into the cost of capital that I'm ready to give you today. I view you as like having regulatory and compliance risks, again, in the jurisdictions where this is more regulated, but even in the ones that where this is less regulated. I would call these standards something like soft law. We have this expression in legal parlance. Sometimes you don't have specific requirement under the legislation, but the market, and in this particular case, capital market, imposes softly the standards on you, because otherwise it doesn't give you the capital under the terms that are feasible for you. And it basically nudges you towards behaving in a way which is more feasible and acceptable for investors, while this is not a specific requirement of the legislation. And we've seen a lot of this, not only in relation to ESG, but earlier, actually, precursor of this, I would say, would be corporate governance in general. It was clear in Georgia for many years that implementing corporate governance standards, for example, was good for the companies in attracting the capital, but specific requirements were not present in the legislation, and it took many years to improve those standards. And capital markets usually plays a crucial role in nudging you or forcing you to adopt the standards which are otherwise legally not a hard requirement. And large companies also require the supply chain participants, like other companies, to comply with this, because then if they don't, they are also penalized in their own endeavors to attract capital. So these are these components which build the overall risk profile and penalize you if you don't comply with the ESG standards. And overall, as I mentioned in the introduction, it's no longer just a reputation or the buzzword. It's really something that's costs you. And you just, this is the only way forward.
Okay. Very nice. I would say the ground for the to move to the practical steps and finding the how we're financing that and the money. Then I would go again to the Nano with the question is like, I know that there are several business owners here and the managers as well, and myself too. So the question would be that if we want to go to the business owners, want to go to the start to sustainability journey, and we feel a little bit overwhelmed with that, what is from your side, single most practical first steps you would recommend they take in the first line?
Georgi, it's like $1 million question, but I will try to answer it. You know, if you would ask me this question, let's say a decade ago, I would say start with people. And this question still holds true, but today my answer would be start with people who understand technology. Because oftentimes when people think about sustainability, when people think about ESG, they don't necessarily link this to technologies. While technologies are very important and they can help you to become more efficient, I'm talking in terms of ESG and sustainability. So the first piece of advice would be start with people who understand technology. The second would be when you are faced with sustainability, as rightly mentioned by Nino in the beginning and Marina, you are dealing with investors. And if you have not done it before, it seems and it looks like very different, which I will not lie, it's different and difficult from the generic business operation model. But another piece of advice would be that you should start from somewhere. Start small, but start now. Even it is development of one policy, if it is changing only one regulation, if it is introducing a couple of businesses, you should start from somewhere. Because what I'm seeing in the sector when I'm talking to my colleagues here in Georgia or abroad, like, oh, no, it's difficult, we not have time. I'm telling you, you do not need billions to start sustainability journey, but what you need is even more costly than billions. It's change of mindset and it's change of attitude, which is difficult, but possible. So start small, start now, and get around right people who understand technology and who believe in sustainability.
Okay. then it's basically goes directly to the Nino, because then the question would be that if I'm a SME, I mean, what are the key criteria that the businesses need to meet to access the funds, and what support does TBC provides beyond just the capital in terms of being the partner companies being the moving towards the sustainability, and that might be the example for some of the financial institutions and the companies in the region, I mean, in our frontier markets as well.
Yeah, so if we split this question into parts, what the companies can do in order to start, this is the first, and second, what TBC primarily is doing in order to support, right? So if we answer what we have seen with starting for SME companies, so when it pop-ups in their mind, it's when they want to save the costs. This is how they are starting. Maybe we're talking about some great things, but still, primarily the main decision, whether start or not, whether they can do a profit, save the cost, and increase the profitability. So that's why we're saying that starting with the greening, like a solar power plants, which the technology is really now it's much improved compared and cheaper compared to the previous years, might be the smart solution. So all companies, main companies, are calculating their costs. They do know how much they are spending in the utility, let's say, so they can do that and then consult the bank in order to look in a business model whether the investing in the solar, let's say, makes sense or not. So the banks do provide such consultancy. That's why probably in our SME portfolios, mostly we see those solar power plants. So probably this is a result of that. If we go to the second questions, what primarily TBC Bank is doing. So we started our journey quite a long ago. We also started with the environmental part, measuring our own impact on the environment of the Georgia. So this was probably for 3-4 years before we created our own ESG framework and ESG strategy. So right now we have a lot of programs, information sharing, consulting, different trainings. Last week we have our report on sustainable annual report on our sustainability, and one if someone is interested in looking that there are so many directions that TBC right now is investing and with its partners doing all parts, environment, social part, governance, so a lot of projects. And probably like if we summarize the two, sharing the experience, bringing this information to as much clients as possible through our employees, and providing different financing the projects. So for example, together with developer, and Nana has also put a lot of effort in that program, we created this specific ESG academy, both for our employees and the clients as well. And we already trained up to 300 or 800 of our employees and 80 our clients, SME clients, where we are talking about what is a green, build the green future. This is the name of the course, and we're talking about everything what of the topic of our today's conversation. And we are planning to enlarge that system, this training, to as much clients as possible. Hopefully Nana will continue collaborating with us as well. And finally, so one, then to its partner, then to its competitor, and all this information sharing finally brings to the decision, maybe this is something interesting and I need to start from the scratch. And then banks and TBC Bank is ready just to help with the business model calculation, getting some consultancy, some financing, and etc.
Okay, so what I hear, correct me if I'm wrong. So the practical way would be find some project internally or something which is I would say connected with the sustainability and try to implement with the right people and right technology. So this is what I've heard
Yes.
currently from both of you. And jump to the Marina. I would complete this practical thing, and as well I would be asking Marina to tell us the following. So beyond the bank loans, what might be the financing options for this kind of initiatives or the companies they want to become sustainable? And then I will continue on the a final question. How big is big enough for that?
Yeah, Georgia, I've been in investment banking for many years in Georgia. If we speak about Georgia specifically, and then I'll move to the frontier markets. For our country specifically, the ticket size has always been an issue. So even if you put aside ESG and the capital market products they would want to implement or issue in the local market, the size has always been an issue because it's quite expensive to issue a capital market product, and it's very difficult to compete with commercial banks in Georgia because of some many factors that contribute to this. So for the companies that are large, obviously it's easier to be convinced that ESG is the way forward, and it makes sense to invest because, let's face it, it's not free of charge to shift the mindset, as Nana said, and start implementing this framework and incorporate it into the corporate culture. But what the business should get in exchange is the value added, and it has to be capitalized in the profits in the future. And in case of capital markets, expressed in the lower price of the capital to attract. Now, going back to the size, because the size is key and not so many companies are able to tap the market in those volumes. Like for Georgia, 1 million is already not a very little issue size, right? So usually you go to bank in general, and then if you look at the activities on the local market, it's usually the IFIs that again nudge you, but they do it through the infrastructure projects. They focus usually on the energy sector, on renewable energy direction, climate resilience, etc. And very often they engage the PPP projects to deliver these standards or see them realized in practice. So it's very difficult for the smaller companies and projects to tap into the capital, while on the one hand they may want and do implement or endorse the ESG standards, but on the other, the size of their needs is not very high. And in those cases, of course, one thing they can do is to prepare and do the due diligence and become bankable in the first place, and then scale what they're doing, or look for the similar projects and aggregate and do something similar to basically syndication, but not from the financing side, but from in the context of finding common interests with other players. Nevertheless, this is a very good step forward because sustainability is also about the growth once again, and if the company wants and should grow, it always makes sense to start preparing and become bankable first, and then go to the bigger markets and tap the capital market. Otherwise, big companies, corporate entities that do this, it's much easier to convince them, obviously, because it's worth, and the decreased cost of capital is really something that is very tangible for their business and financial profile. I don't know if I fully answered the question. Yeah.
I think
Usually,
we are good on
larger
that.
countries like Kazakhstan. Sorry?
I think we are good on that. So answering the questions.
Okay.
I would have the kind of so we have the 10
Georgi,
minutes
sorry,
left.
I will
So
add, Georgi, I forgot to add one more thing. In figures, for IFIs, and it differs across different IFIs. For some, it's 10 million, the ticket size. For some, it's 1-2 million. But if you look at the private equity and venture capital, actually, it can go down as low as 250K. So when I say small, I mean really small. What I said about aggregation, I meant below 250K. So it's not actually that much. Any credible project initiative probably should be able to handle that. Yeah, and also there are a lot of opportunities to mingle or merge different approaches, like start on one platform, do the bank loan, but also do some other forms of attracting capital. So you can mix and bundle basically different opportunities together. Sorry, I forgot to mention.
interesting. So we have left like about 9 minutes, and we want to. There is a very couple of interesting questions in a chat that I want to ask you. But before we go into this chat, I would have the one question for Nana and the one question for Nino, and then we move to the questions from chat. So, Nana, just a quick and a very short practical piece of advice to those ones who still do not believe in the sustainability and are hesitant. So where they start to really understand that this is worthwhile. Basically, I'm talking about the owners and the CEOs of the companies.
First of all, start believing in it. It would be
How?
very short, but it's very. I think practical thing could be, guys, you can use your board of directors as a good entry point for you, meaning that that would be very good to bring a couple of people who would have very strong understanding about sustainability and who would basically challenge you whenever you have new strategy. That would be first one. And second, if you are a little bit hesitant in terms of introducing a lot of new policies, which will make you more sustainable, maybe in your business risk analysis, start looking at climate change, labor, and community engagement. So that would change a lot in the way you do your business.
Okay, Nino, what you expect as a future trend in the sustainability, and how we in the business supposed to be prepare ourselves?
Yeah, so sustainability becoming, how to say, very much the awareness of this term and the meaning in the young generation is very big. For example, when we have a different trainings, and of course we have multiple of topics, most attended one when our lead Maka talks about the sustainability and the whole ESG topic. It means that in the future, if the businesses will not turn and start taking the first steps, their product, their services would not be interesting for the young generation. For example, we are remembering, let's say in a booking.com, there is a certain mark pointing out that this business is sustainable. For example, when I'm booking the hotel, I do look at that, and somehow it affecting my choices as well. And it is much, much, much more important for the young generation. When I'm looking on my children, my daughter, my son, so they are so much interested in that. So I think it's a right time to start doing that if we want our businesses to be stable and interested for coming generation.
Okay, thank you very much.